Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como and I'm with Ireland Como Lafoy. We got a good show for you today. We're going to talk about, there was actually lots of canola headlines out today. We don't normally see canola headlines, but today we saw a few of them, like three, I think, which is great. It's great to see information being published about our prized commodity canola here in Canada. We also have some chart updates for you in the row crops, and crude oil is an important one as well as some of the wheat. So let's get into what happened in markets today. It is Friday, so we get a couple of days off here. All right, let's start with canola, which actually spent most of the day in the green today, but we did see it fade out during the session, minus or lower by $3.40 a ton today. Canola finished at 616.80. Minneapolis wheat was down 4.25 cents at 570 today. That punched to a new low. Kansas and Chicago weren't able to produce new lows. I shouldn't say weren't able. They managed not to produce new lows today. Kansas was down a cent at 506 and a quarter. Chicago was down a quarter of a cent at 520 and a quarter. Soybeans were down 6 at 1033 and a half. Corn was down 1 3/4 at 420. Soybean oil was down 70 points at 51.98, dropping below the 52 handle there. Canadian dollar about unchanged, 16 points down, 72.20 at the time of this recording. Live cattle and feeder cattle. Feeder cattle were unchanged today. Live cattle was down 97 at 237.28 a hundredweight. Now, I do want to talk a little bit about the weekly change in the closing values. So in our weekly reports, we do put together a week over week futures value change. And you can see here that there's some shifts that may not have translated well when looking at it day to day. We see some significant losses in soybeans this week, 27.5 cents lower. Canola overall is $9.60 lower. Minneapolis wheat is 15.25 cents lower. Chicago wheat even 17 cents lower. So lots of negativity in the markets this week. Although when it's translated into every day, it doesn't necessarily look as stark. So I think it's important to take a look at the weeklies every once in a while. That's why we publish it in our weekly report, which is a great segue into our weekly report this week. So if you want to become a subscriber and get all of our insights, it's only 99 bucks a month. You can cancel anytime. There's no obligation there. And you know what? I'm going to show you a little bit about our report this month or this week. It's a good one this week. There was lots of information and data reported by the European Commission and ABARES, or the Australian Agriculture, the government agriculture ministry. And so we do a dive into the European fundamental situation. We do a dive into the Australian fundamental situation. And then we talk a little bit about the Canadian exports. Recently, the Canadian merchandise trade data showed the end of the crop year export information. So we take a look at that in relation particularly to canola and wheat. And there's our futures recap for the week. So if you want to get in on those, go to CanadianAgMarkets.com to subscribe, and we'll get you hooked up and receiving all of our reports. If you do subscribe in the next, over the weekend here, I will send you this report that came out today. So hit that subscribe button. Thank you so much. Let's get into some of the headlines in canola today. First, I think, and maybe most important, China delayed a final ruling or prolonged its probe into Canadian canola imports, which buys about 6 more months of negotiations that could ease some of these trade disagreements, which of course was sparked by Ottawa's tariffs on Chinese electric vehicles. The Ministry of Commerce said the anti-dumping probe would now run until March 9th, 2026, citing the complexity of the case. Beijing, which is the world's largest importer of canola, did impose preliminary duties of 75.8% on Canadian canola seeds in August, at the beginning of August there. The final ruling could result in a different rate or an overturning of the decision. But the extension does buy some time for both sides to seek a negotiated solution, was a quote from an analyst or a Beijing-based trader. Ultimately, the best case scenario here is for for China or for China would be to strike a deal, which it drops the investigation, and canola and Canada lifts the tariffs on Chinese vehicles and metals. But given the complexities involved as Canada tries to keep its US trade relationship stable, that may be easier said than done. So overall, this could be a good thing, although the tariffs are in place, and that is still hampering the trade of canola to China. However, our government has decided that a subsidy is the right way to go. Ottawa today announced 370 million in new support for Canadian canola producers, which are facing those massive tariffs from China. The federal government said on Friday that new biofuel production incentive is meant to address immediate competitiveness challenges. The measure was widely seen as a response to Canada's 100% tariff on Chinese electric vehicles. The these funds are meant to assist domestic producers and restructure their value chains. Prime Minister Carney said in a prepared remarks as he announced a suite of supports for tariff affected sectors in a speech today. Uh, he also said that the government will amend its clean fuel regulations to help the development of a vibrant biofuels industry in Canada. And he said that the government will temporarily increase the amount producers can receive interest free in advances to $500,000 to kind of boost funding to support diversification to new markets. Now, I'm not a big fan of subsidies because it doesn't really fix the free market trade as it goes. And sometimes what it can do, if farmers have access to funds, sometimes they will sell canola instead of waiting for it, looking for it as a subsidy. Although on the flip side, some may hold as the cash flow situation gets a little bit more looser. So it's hard to say. Again, I'm not a huge fan of these types of subsidies. I think that the Canadian government should work more on mending fences with China and with our other trade partners, and even create new relationships with other trade partners. More headlines on canola here. The Regina crush plant should help offset some loss to the Chinese demand, although, in my opinion, here the start of the processing is delayed more than I would have expected. Um, the Let's see, Jeff Vassert, which is the president of Cargill Limited or Cargill Canada, he said at a time of uncertainty in the canola markets, to have domestic demand is a really good opportunity for the farmers. And they also said that the company will start commissioning the plant in the next couple of months. So it will be up and running before the end of the calendar year. Now, I expected it to be up and running before that, and I'd even factored some crush from that plant into my S&D. So I might have to take a look at that and amend it a little bit further. Obviously, there's usually delays in construction and things like that, but I had largely believed that those were taken care of, and we'd be seeing a canola crush ramping up in late September or early October, but maybe that's not the case. We also should see the LDC plant also up and running probably by early January, maybe even late December as well. So as we move into the calendar year 2026, we might see an improved crush situation. Here's what the chart in canola looked like today after the trade. As you can see, it punched higher up to about $630 after some of those headlines were released, but then faded back down to trade or to close right at about 616, which is even a little bit lower than where it closed at yesterday. As you can see, canola still follows this channel, and we've been kind of talking about this 20-day, 200-day moving average cross. That's a bearish signal. The 50-day crossing the 100 is also a bearish signal. So we still do expect lower prices as harvest and some of these technical signals play out in the marketplace. But at some point, we will see some support. We're kind of expecting that in the 600 to 610 area, at least at this point. One of the reasons why canola may have sunk at the end of the day here is related to other markets. Soybeans also saw some gains today, moving into the, 730 738, 736 area, but then sold off quite significantly into the latter part of the session. There's a couple other commodities that did the same. Here's December soybean oil. It actually closed at its lowest close since the gap trade back in the middle of June. So it has traded lower. Like yesterday, it did. Oops, it did. I went ahead too much. It did trade lower yesterday, moving below this support line, but today's close at 51.23 is the lowest close that we've seen since back here in mid-June before the biofuels announcement. So that is not a technically good signal either. Although it's a pretty weak close below support. So it's possible that will still act as some support. We'll have to see as we move into next week. And next week we do see the USDA report released as well. Um, Here's December crude oil, and I'm putting the blame on crude oil here when we look at soybean oil and maybe some of the other factors affecting soybeans as well. We did see crude oil almost dip down to the 61 level here. It did close at about 61.36, but that is a pretty poor day for the crude oil market, and that is affecting the commodities that are also related to biofuels, such as the canolas, the soybeans, and the soybean oil, etc. Here's December corn. We're kind of seeing some flat trade here after the gains in the yield reductions. So we'd be looking for, we were kind of expecting this to move up to the 430 area, but we're seeing some consolidation here. We can see the 100-day is now converging onto that same resistance level. Hopefully we can still see some legs in the corn market and give farmers an opportunity to price some more corn, prior to the big harvest glut there. Here is December HRW wheat. Now, the wheats here were mainly anemic today, not trading a whole lot. At least you can say that for the winter classes. Here's December hard red winter. Here is December Chicago. But of course, our lovely spring wheat did not pay attention to those, and it actually punched back down to a new low today, closing at 566. I think there is some significant harvest pressure coming in here on the spring wheat side. Let's look at what the crop reports from the Western provinces said this week. Spring wheat in Alberta on average was 25.8% complete. That the harvest overall is a little ahead of average. I'm thinking spring wheat is probably at average. So we're still, we're call it a third harvested at this point in time, or at least by this point, this a couple days ago. So we're right in the gut slot of harvest for spring wheat. The same thing can be said for Saskatchewan. I really don't like how they report this, but spring wheat 14% combined as of September 1st. So that was 4 days ago or so. We might see that in the 25% or so now. So again, we're right in the gut slot of harvest for spring wheat, which is continuing to put pressure on this market as well. All right, that's all we have for you today. Hope you have a great day. Remember to subscribe at CanadianAgMarkets.com/subscribe. We'll see you again next week.